All right, everyone, and welcome back to TalkTickers. Today, we are diving deep into S&P Global's Q3 2024 earnings. So picture this, a company riding this financial roller coaster, hitting these record revenue highs, but at the same time navigating, a bit of a choppy landscape. That's S&P Global right now. And we're here to break down what is driving this performance, what challenges are they facing, and what does it all mean for you?
Yeah, it really is such a fascinating case study, in how to navigate this complex market. And we've got their official earnings call transcript and some market data to help us dissect all this.
Perfect. So let's jump right in. S&P Global posting some exceptional Q3 results, right?
Exceptional might even be an understatement. Revenue is up 16% year over year, and get this, their third consecutive quarter of growth acceleration.
Wow, someone's got the wind in their sails.
Yeah.
What is fueling this kind of performance?
Well, it's a couple of things coming together. First, the debt markets are absolutely on fire. We're talking over $1 trillion in bond issuance in Q3 alone. And you combine that with the strong equity market, you've got the perfect recipe for S&P Global success.
Okay, so help me understand this a little better. Why is all this bond activity so good for S&P Global?
Well, because every time a company or a government issues a bond, they need a credit rating. And S&P Global Ratings is one of the big players in that space. They're kind of like the gatekeepers, assessing the risk for literally trillions of dollars moving through the debt market.
Okay, so the more bonds are issued, the more business S&P Global gets.
Exactly. And you can see that in their numbers. Their ratings division saw a 36% revenue increase, which is a huge chunk of their overall growth. But it's not just about the volume. This surge in bond issuance also tells us something about how investors are feeling. It suggests a willingness to lend and borrow, despite all the economic uncertainty.
That's a really interesting point. It's not just S&P Global capitalizing on a trend, but it's a window into how the market is feeling overall.
Absolutely. Now, while ratings is leading the charge, other divisions are also contributing to this impressive performance. For example, their indices division, which tracks things like the S&P 500, is up 18%, mirroring that strength of the stock market.
So S&P Global is kind of like a financial barometer, reflecting the ups and downs of the market.
In many ways, yeah. But like any complex organism, it's not all smooth sailing. They are facing some headwinds, too.
Ooh, here's where things get interesting. Hit me with the challenges.
Well, one area they highlighted is the financial services sector. They're running into what they call elongated sales cycles, meaning it's taking longer to close deals. And there's also increased price sensitivity from their clients.
Okay, but why is this happening specifically in the financial services sector? I mean, other industries are facing economic pressure too, right?
That's a great question. And I think there are some things going on specifically within that sector. The financial services industry is seeing a lot of consolidation, lots of mergers, acquisitions, bigger players. So this creates a more complex sales environment for S&P Global. They're dealing with fewer clients, but these clients are much larger and they have more negotiating power.
That makes a lot of sense. So it's not just about the economy, but about the changing structure of the industry itself.
Exactly. And this dynamic is really impacting their market intelligence division. We can see that in their slower growth compared to other divisions. Market intelligence only up 6% in Q3.
And they even talked about an increase in cancellations among their smaller market intelligence customers.
Right. It seems like these smaller players are feeling the pressure and looking to cut costs, including, subscriptions to data and analytics services.
Okay, so we have this tale of two divisions. Ratings is booming, but market intelligence is facing some pretty serious challenges. Where does that leave S&P Global as a whole?
Well, it's important to remember that S&P Global is massive, and they're very diverse. Even with these challenges, they're still seeing overall growth. They're acknowledging the headwinds, but they're not letting it derail their overall strategy. And speaking of strategy, we should probably talk about leadership, because there are some big changes happening. Leadership changes can signal a shift in a company's direction. And in this case, we see Doug Peterson, the current CEO, stepping down, and Martina Cheung stepping into that role. Now she's been leading S&P Global Ratings, so that experience will probably come in handy given their performance this quarter.
It's an internal promotion. It sounds like they have confidence in her ability to navigate, all this. I'm curious, though, what are the broader implications of this change in leadership?
Yeah, it's interesting because it's not just a change at the top. They're also shuffling leadership within divisions and creating some pretty unique horizontal functions, like a new chief enterprise data officer and a chief client officer.
Okay, so they're really shaking things up. What's the thinking behind this kind of restructuring?
Well, I think it shows a couple of things. First, they're really focusing on their enterprise data strategy. S&P Global has this massive amount of data from all its divisions, and it seems like they want to use that more effectively.
Like building a data-driven nervous system across the company.
Yeah, exactly. And with the chief client officer, it's all about creating a better client experience. Instead of each division working on its own, they want to have a more coordinated approach.
So a more holistic vision, both internally and externally. Makes sense given all those challenges in market intelligence. Maybe this unified approach can help with that.
That's a great point, and it really connects with what we've heard about their investments. S&P Global is putting a lot into sustainability, private market solutions, and drumroll please, generative AI.
AI was bound to come up. Everyone's jumping on the AI bandwagon these days. But I'm curious, what is S&P Global actually doing with this technology? What are they building?
They're doing some really interesting things. For example, their market intelligence division has this new platform, and it uses AI to let users build predictive models and automate their workflow. So imagine you're a financial analyst, and suddenly you have these AI tools to help you analyze trends and make smarter decisions.
It's like having a superpowered research assistant. That could really streamline things, maybe even give them an edge over their competitors.
Right. And it's not just about making their products smarter. They're also exploring completely new areas. Over in their Commodity Insights division, they've got this AI chatbot called Chat AI. It gives real-time answers to customer questions. Think of it like an instant expert on commodity markets.
Wow, so no more sifting through reports or waiting on hold for customer service. You get your insights right away from an AI chatbot. That's pretty cool. It sounds like they're really integrating AI into their business.
Oh, they are. And it's not just about the tech either. They launched an internal AI academy called Spark AI Academy. So they're training their employees to use these new tools, investing in their people as much as the technology.
That's smart. Because AI is only as good as the people using it. This shows they're serious about using AI strategically, not just as a gimmick.
It really does. But let's not forget about those challenges we talked about with market intelligence. The slower growth, the cancellations. How is leadership addressing that? They're not just hoping AI will magically fix everything.
Right. What's the plan to get market intelligence back on track?
Well, during the earnings call, Martina Shung actually talked about this. She said they're going to focus on three things: innovation, increasing customer touch points, and capitalizing on structural growth opportunities. They're staying strategic.
Okay, let's unpack that. What does focusing on innovation mean in this situation? Is it all about AI, or are there other things they're doing?
AI is definitely part of it, but it's more than that. They want to create new products and services, things that will meet their clients' needs, especially in the financial services sector. Think data analytics tools that can help companies handle regulatory changes or manage risk in a volatile market.
So they're not just reacting to the current problems, but trying to anticipate future needs.
Exactly. And by increasing customer touch points, they're really building relationships and trust. This is especially important with those smaller clients, the ones who might cancel their subscriptions. It's about showing them the value and giving them personalized support.
Like saying, hey, we hear you, we understand your challenges, and we're here to help.
Exactly. And lastly, those structural growth opportunities. That's about finding and taking advantage of big industry trends. Like the rise of private markets is a huge opportunity for S&P Global. So they're creating solutions for private equity firms, hedge funds, and other players in that space.
So they're playing the long game, not just reacting to what's happening right now.
Exactly. And this strategic thinking is clear in their recent leadership reviews, which reaffirmed the direction set out in their 2022 Investor Day. They're sticking to their long-term plan, even when things get rough.
Okay, so we've talked about leadership AI investments and a plan to tackle those market intelligence challenges. But let's be real, the bottom line matters. What do S&P Global's financials look like?
Well, get ready for this. They actually increased their full-year guidance across every single metric.
Seriously, with all the challenges we just discussed. That's a bold move.
It is. They're now expecting revenue growth between 11.5% and 12.5%, higher than their previous estimates. Their adjusted earnings per share are also up, and they're forecasting a 50% growth in billed issuance for 2024.
50%. That's a huge vote of confidence.
Yeah.
Especially with all the economic uncertainty out there. Are they being overly optimistic? Or is there something else driving this confidence?
They don't usually make wild predictions, so this is worth paying attention to. A couple things really stand out. First, their diverse business model helps protect them from ups and downs in any one market. If one division struggles, others can pick up the slack.
Yeah, that makes sense. Not putting all their eggs in one basket. But still, 50% growth in billed issuance is pretty impressive. What's driving that?
Well, it suggests the debt markets are going to stay strong. Remember all that bond issuance we talked about? Yeah, that trend seems to be continuing. And S&P Global is in a great spot to take advantage of that. Their reputation, as a reliable credit rating agency is really valuable right now, especially in a market where everyone's worried about risk.
It's like they're the gold standard when everyone's looking for some certainty.
Exactly.
Yeah.
And this confidence also shows up in their margin expansion projections. Even though they're investing more, in people and products, remember that AI Academy, they still expect to see those profit margins grow.
So they're growing, they're profitable, they're investing in the future. Sounds like a recipe for success, even with a few bumps along the way.
It really does. But here's the thing. S&P Global seems ready to handle the current challenges. But we can't forget about those unexpected events, things that could really shake up the markets and impact their performance.
Yeah, you're right. We can't predict the future, no matter how much data we analyze. So what are some of those potential curveballs, the ones that could disrupt things for S&P Global?
Well, that's the million-dollar question, isn't it? Let's see. Well, one thing that's been on everyone's mind is geopolitical instability. We're seeing tensions rising around the world. What if those escalate into a full-blown conflict?
Yeah, that's a scary thought. And it would have a huge impact, wouldn't it?
Definitely. Markets don't like uncertainty, and conflict disrupts everything. Global trade, could even trigger a recession.
And that would directly hit S&P Global's business.
Oh,
Right?
absolutely. Think about the ratings division. Sovereign debt ratings could be downgraded, which impacts investor confidence, increases borrowing costs for entire countries, and their commodity insights division. Well, the conflicts usually disrupt supply chains, create a lot of volatility in energy prices, raw material prices.
It's not a fun thing to think about, but it's important to acknowledge these possibilities. What other potential disruptors are you thinking about?
Well, another one is inflation. We've seen how persistent it can be. What if it really gets out of control? Despite what central banks are trying to do.
Yeah, that would be a game changer. How would that affect a company like S&P Global?
Well, for one thing, it would put a lot of pressure on companies and governments, possibly leading to downgrades in credit ratings. That would be a direct hit to S&P Global's ratings business.
So their success is tied to the overall economy.
Exactly. And higher inflation could also lead to more volatility in commodity markets, which would affect their commodity insights division. Businesses and investors rely on S&P Global's data and analysis to help them, especially during times of uncertainty. And a surge in inflation would create a lot of uncertainty.
Okay, so we've got geopolitical instability and runaway inflation. Anything else on your radar?
Well, we could also think about technological disruption. We're in this tech revolution. AI, blockchain, all these innovations are changing things so fast.
But hold on. Isn't S&P Global embracing those technologies? We talked about their AI investments earlier. It seems like they're at the forefront of all this.
Yeah, they are, and that's great. But what if a new technology comes along? One that really disrupts their core business model? What if the way we assess risk changes completely? Or the way markets operate? Think about how fintech startups are already challenging the big financial institutions.
Yeah, that's a good point. No company is safe from disruption. It doesn't matter how big or successful they are. Like that saying, the only constant is change.
Exactly. And S&P Global needs to be able to adapt to all these changes. Just like any other company, they've shown they're willing to innovate, but they need to keep evolving because the landscape is always shifting.
It's a reminder that even with all the data and expert opinions out there, we can't predict everything.
And that's what makes all this so interesting, right? It's not about having all the answers. It's about understanding how things work, being aware of the risks, and asking the right questions.
Couldn't have said it better myself.
Yeah.
We've covered a lot in this deep dive into S&P Global's earnings. I'm impressed by their performance, but also a little bit humbled by the sheer size of their operation and everything they deal with.
It's a lot to process for sure, but you don't need to be a financial expert to get the main points.
That's right. Whether you're an investor, a business professional, or just someone curious about the world, there's something to learn from S&P Global's story.
So let's recap those key takeaways for our listeners.
Okay. First off, S&P Global is a giant in the financial world. Their business is so diverse, they're involved in everything: credit ratings, indices, commodities, market intelligence.
And they're not just a data provider, they're a key player in assessing risk-setting benchmarks and shaping how markets work around the world.
And they're not slowing down. We've got a new CEO, a renewed focus on integration and their clients, and big investments in areas like AI and sustainability.
They're facing challenges, yes, but they're addressing them strategically, with a long-term vision and a commitment to innovation.
This deep dive has been an incredible journey. I hope our listeners have a better understanding of S&P Global and also the factors shaping the financial world and the questions we should all be asking, especially during these uncertain times.
And remember, finance is always changing, so stay curious, keep learning, and don't be afraid to dig into the data, the trends, the stories that shape our world.
And until next time on TalkTickers, stay informed and keep asking those tough questions.